Doc. We're talking long-term, but quickly, let's talk short-term. A casualty in the market today, the airlines. Getting hit real hard. United Airlines down 6%, Delta 5%, JetBlue, Alaska, Southwest leading the declines for the transports today.
Right, but that's going to be, I believe, a very short-term event, Judge, and should be bought. Because I believe that Bob Iaccino is exactly right. You're going to see WTI coming on big as far as the production at these levels and as far as them slamming the market with it at 105 and 106. It was 110 last September, and then they had to ride it all the way down. I think they bring a lot of that production right now, Judge, and that turns this around. But I'd also point out that I like Steph with the ESV, and I also like Seadrill Murph. But take a look at Diamond Offshore. Because of some of the contract that they lost, that stock has been battered. It's $30 below the 52-week high. That's one I bought today in addition to those other two.
Okay. Eric, our thanks to you. Bob as well. And Michelle, of course, always our thanks to you on the Halftime Show. Guys, great discussion. Coming up on the half. Twitter today. Welcome to the Halftime Show. Here is our game plan today. Downward dog. As Lululemon shares hit a 3-year low, we debate whether the stock can get upright anytime soon. Comeback kids. Can the stocks that have been beaten down the most this year make a second-half surge? Worst trade of the day. Why Panera Bread is getting a knuckle sandwich today from a most unlikely customer. Yeah, Michelle, I want you to stay with us. We're breaking this down now from all angles with our panel of traders today. Steph, John, Pete, and Murph are with us today. Our own oil guru, Joe Terranova, is here as well. We're also joined by Citigroup's oil strategist, Eric Lee, and Bob Iaccino is in the pits up at the CME. Joe, to you first. You watch these markets as closely as anybody. What's your take on what we're seeing and the spike and shock that we've seen in the market?
Well, I think it's happening in a sector that we've all talked about liking all year, and it becomes a very difficult investment or trade because you are going to have to buy a lot of these energy equity names at high prices, in some cases multi-year highs. But that actually will be the right trade. We just had an OPEC meeting. They didn't lift the ceiling. You look at the second half of the year, okay, the call on OPEC is going to be 1 million barrels more per day. Where's that going to come for? You've got troubles Nigeria. You've got troubles with Libya. Now Iran, Iraq, the oil production is not touched yet, okay, but there is a challenge the second half of the year. The plays off of this, Scott, you look north, you're getting the Canadian energy producers, Suncor, Canadian Natural Resources, Cenovus. They're catching a bid today. Look back to the U.S., EOG, which I own, PXD, a lot of the large integrated names. You want to own them as well. But the ultimate decision for the second half of the year is energy is sector leading. There's no reason to believe it's not going to be sector leading for the second half. Stay with it.
Pete, you've been pounding the table correctly for us to keep our eye on the energy stocks.
Yep.
And they're having a big move as a result. Do they continue to ramp up as long as the tensions remain escalated over in Iraq?
100%. I have absolutely all the confidence in the world, Scott. They were moving before this, obviously, and then yesterday, you know, we focused so much on Eric Cantor. That really wasn't the story. I do think it was about the Middle East, and that was part of the sell-off that we'd seen. And if you look over and see where some of these oil stocks were moving to, we highlighted Apache over the last couple of days, but look at Devon, look at Conoco, look at Exxon, look at all of the various refiners, Tesoro. Even yesterday in the negative tape, many of these names finished in the green, Scott. I think there's still upside in a lot of these names. I think they're breaking out to the upside. I'll give you one last name. BP, one of those names that was actually left for dead. It's been moving to the upside, breaking to new highs. I think that goes higher as well.
Bob Iaccino, you're at the CME in the oil pit. What are traders talking about today? How high do you see oil going?
Well, I think both Brent and WTI can rally substantially from here. And the real story is something, it's a mix of what Michelle said and what Joe said. Joe talked about OPEC, and OPEC has a stable sect to it and an unstable sect. If you're looking at Iraq destabilization, you have to talk about Nigeria, you have to talk about Iran. Those aren't exactly stable countries, Venezuela. So if there's going to be a material amount of oil taken offline from Iraq, it's going to be made up by Saudi Arabia, the UAE, the stable portion of OPEC. That could take care of it short term. But Michelle talked about the long-term story, 9 million barrels by 2017. That's a bit unrealistic. Tethys' estimate is about 7 million. But if that comes offline, the long-term plans are destabilized for the oil producers. And if Brent and WTI continue to go up, the trade is to buy Brent and sell WTI, because WTI, the producers will have incentive to hit that bid. And the companies that have an export license for Canadian-originated crude, like Tethys, will have incentive to bring Canadian crude through U.S. ports and ship it off to the European continent, so it can materially change the way oil flows around the world.
Eric, this move has been swift. It's been sudden. Is it overdone?
I mean, certainly the level of geopolitical supply disruptions, not just in Iraq, has really set the scene. A really huge amount of oil offline on the bullish side of the ledger, balanced quite precariously by a huge amount of oil on the supply side of the ledger. So if you look at compared to, say, January 2011, since then the amount of oil that's offline across the world has risen by about 3.5 million barrels per day. But the same amount has also increased in terms of production in North America. Now, I think the issue with Iraq is there's a short-term and a long-term issue. Certainly in the long term, this is a major destabilization. If it's part of a broader trend where we're seeing countries' borders actually being challenged and withdrawn, not just in Iraq, but Libya and recently in Crimea, that's a major long-term story. The short term has some interesting nuances because the fighting at the moment is not affecting the southern regions at the moment, where the majority of the exports are, and actually can continue to ramp up. And also an interesting thing will be whether this brings Kurdistan, Erbil, and Baghdad close together, which means that Kurdish exports, which physically are ready to go, could actually ramp up in the short term.
Right. Murph, what would your trades be out of this? I mean, with obviously uncertainty ahead.
Uncertainty. So I want to own BP as well. I own BP. Pete's talked about it a lot. I think another name you can look at is some of the offshore drillers like Seadrill. You get a great dividend here, and the stock hasn't hit new highs. One thing I'm looking at that's kind of a different angle than these guys are taking is you're seeing WTI spike, you're seeing Brent spike, and I'm looking at a company, Valero. Valero hasn't acted well, and you're not seeing the spread widen much past $6. I'm thinking that could be a good way to hedge your longs, because if that spread doesn't widen, it could put additional pressure on some of the refiners like Valero.
Steph?
So I like restructuring stories because I don't really know, I'm not really good at predicting exactly where oil prices are going to go. Obviously, we have to watch the situation, and if we do spike higher, that's obviously much worse than if we can gradually go higher.
And the experts are slowly sort of raising the high end of their ranges today.
That's right.
I've had with some of them, and that seems to be where this thing's going.
Right. So if that's the case, I mean, the whole group will rally, but I'm liking the restructuring stories because even if it does see a pullback, the crude oil price does pull back, then there's still a story there. And so I would focus on Marathon. It's in my playbook. I would also focus on Occidental. I think Marathon is 2 years behind where Occidental was in terms of restructuring, asset sales, and they just did announce an asset sale in Norway. They're going to bring that cash back and buy back more stock, and they already have a $1.5 billion buyback plan. And I do also like Ensco. We've talked about it endlessly, but I do think the offshore drillers are very cheap. I think the supply issues are pretty well factored in, and you get about a 6% dividend yield while you wait.
What about the oil service names? Schlumberger, Halliburton, some of these names?
They've all run a lot, though. I mean, they have been the leaders in the energy sector so far this year.
But the valuations are still low. I mean, you look at something like Transocean, you look at Rig, and it's trading right now, Scott, barely at 10. And you look at some of these names, I think there's plenty of upside in some of these various names in the service sector.
Well, Rig is different than Schlumberger.
Right.
Schlumberger is the one I was thinking more of the service side. Those are the Baker Hughes, the Halliburton, Schlumberger. Those have been the leaders this year, and they're actually not that cheap.
I think it's important to highlight what's really the way you have to look at this is not so much in the short term. You know, Pete mentioned before the reason yesterday for the market being down. Some said Eric Cantor, some said Iraq. I don't think that's what you want to focus on. I think if you want to talk about Eric Cantor, you want to say to yourself, is there a potential solution here in the U.S. where we could increase our production? We had the conversation in Las Vegas with Harold Ford. I said, Harold, does Keystone get done? He said, no way. In the wake of yesterday's loss by Eric Cantor, there's no way Keystone's getting done anytime soon. I think it's a much larger issue. And now, you mentioned before, analysts slowly coming around. The entire investing community was underweight energy coming into the year. Goldman Sachs in the middle of May finally went on commodities from underweight to neutral. Earnings estimates are finally coming up again. So the spotlight, maybe we've done a good job on the desk highlighting energy, but collectively the analyst community has not been looking at energy. And I think going forward for the remainder of the year, it absolutely now has to.
And Scott, the reason for that is because this was supposed to be the time when finally Iraq and Libya were really going to come back. I mean, you take potentially, well, Libya's gone, basically, when it comes to oil production, and now potentially Iraq. and you've got a lot less supply than anybody expected. This is a complete turnaround from what the world was looking for. And Bob was talking about earlier how expectations down to 7 million barrels per day. Remember, the original expectation for Iraq by 2017 was 12 million barrels per day. Just goes to show you what instability in a country does to ruin investment and production.
This is actually not that new of a story. The aggressive violence is new. But British Petroleum started pulling people out of Somalia last year. And it's foreign direct investment that has helped that ramp up. Okay, the Somalia fields went from 700,000 a day to about 1.5. That increase has slowed now. So the foreign money, if that pulls out because of the destabilization, everybody's right in looking at it. Joe's right. The long-term story is really an important thing here because Saudi Arabia alone could probably make up 2 of the 3.3 that Iraq is producing right now. The rest of the Arab world can do that in OPEC, but the rest of OPEC is not stable either. So it's the long-term story that becomes really, really important. And again, it can materially change the way that oil moves around the world. Right now, oil moves in seaborne crude moves this way. It could start moving the other way.